Are you thinking about buying or selling a home right here in the Reno-Sparks area? This is the video update you can't afford to miss. The market is shifting fast, inventory is up, interest rates are unpredictable, and buyers and sellers are trying to figure out their next move. So in this video, we're going to break down the latest data, pricing trends, and what it all means for you and your bottom line. So no hype, just the facts, charts, and insights you need to make smart real estate decisions right now. Let's go.
Assist you sell way smarter.
So before we get into the actual information in this video, I want to cover a few things. Number one, this is for the Reno-Sparks metro area, only includes single family residential property. So basically houses, condos, townhomes. Does not include multifamily, land, lots, commercial, anything like that. Now this is the May 2025 market update, which means it's information and data through the end of April, basically the first third of the year. Now on these charts, you're going to see different numbers. Most of them have this yellow box, which is the main data point we're going to be talking about. On the right side over here is the previous year. In this case, it will be April of 2024. And then of course, you'll see the difference in the compared, the percentage difference right here in the middle. In this particular chart, which happens to be mortgage rates, you have the interest rate over here and the dates along the bottom. Now, most of these charts go back about a decade, 10 years, just to give us a good sample size. So let's go ahead and dive in. The first thing we always look at is mortgage rates. Right now, we're sitting at 6.7%, which is actually down slightly from where we were at last year at 7%, down 3.9%. What I want to point out here is you can see these interest rates are starting to channel, if you will, meaning they're kind of bouncing around between low sixes and just over 7. Do expect that continue for the foreseeable future. There's not a lot that's going to push interest rates one way or the other. Now, why are interest rates so important in mortgage rates? Because they affect mortgage payments. Right now, we're looking at the average mortgage payment of just over $4,000, which is almost dead even from last year, where it was $4,030. And you can actually see, that channel forming right here along with interest rates. There's a direct correlation between interest rates going up. You can see that here. And obviously mortgage payments going up as well. And that all affects what's called affordability. Quick on this chart. Basically, this chart is, in terms of a percentage, what the median income earner can afford in terms of the median price of a home. And we'll talk about the median price here in a moment, but basically it's a percentage. So you want to see this at 100% or higher. That means the median income earner can afford 100% of the median price. In this case, we'll talk about the median price of roughly $550,000. Now, as this number drops, right now it's at 54, which is exactly the same as it was last year. It means that a median income earner in the Reno-Sparks area can afford roughly 54% of the median price. Speaking of prices, let's talk about the median price, which tends to get the most press and buzz in the newspapers and on television and so on. Right now, we're sitting at $543,000, which is up 2.5% from last year, where it was at $529,500. As you can see, the channel forming here as well. Prices have kind of hit a ceiling, and I expect that to continue as well. I do expect prices to maybe soften, and I'll show you why here in just a moment. Now, let's look at new listings. On the left side of the screen is total count of listings, and of course, the dates. This goes back to January of 2015 here. And as you can see, this is kind of a pulse. It almost looks like an EKG or something. Our market is cyclical like most, in that usually the market picks up the end of January into February, March, April. You start to see listings, sells follow suit, and then things start to fall off towards the end of the year into the holidays, and that's exactly what you see here. The peak for new listings is generally right around now, April, May, June, and the bottom is usually right around December, January. As you can see here, we're starting to see a little bit more normal. We have sitting at 696 total new listings, which is up 7%, just over 7% from last year, where we had 649. Now, what it gets interesting, what you're seeing on this chart here is a total number of listings, but on the bottom, it's broken down by price range. So as you can see, this is 1 to 200, 2 to 300, 3 to 400, 4 to 500, 5 to 600, 6 to 750, and then 750 to $1 million, 1 million to $1.5 million, and $1.5 million plus. So this gives you an idea of how the new listings are distributed across the different price ranges. As you can see, the bulk of the listings are in this area. I want you to keep an eye on this upper end area though, the 600, 650, all the way to $1.5 million plus as we go through these. Now let's look at active. Now you may be asking yourself, what's the difference between new and active? New listings are just listings that came on the market where people said, yeah, I'm ready to sell my home, put their home on the market in the month of April. Active inventory, this is the total homes on the market. So these are the homes. If you're looking at buying a home, this is the number of homes you could go out there and look at and potentially purchase today. If you're selling a home, this is your competition. Right now we have 1,200 and 9 listings on the market, which is an impressive 39.6, just shy of 40% higher than we had last year, where we only had 866. But what we're starting to see here is more of a recovery to more normalized numbers. So the more houses you have, that tends to put more pressure on prices. Now let's look at active by price. This is where things are interesting. If you look at these numbers up here, look how many active we have. Nearly 150 homes active at over $1.5 million. $1 to $1.5 million, we have roughly 100, and then 750 to 900,000, about 160, and so on. So this is the distribution of the total active inventory that's out there to look at today. This is where it gets interesting and sold. This is homes that closed in the month of April, 485, which is up just slightly from April of 2024, where there was only 466. Now, where this comes into play is when you have closed sales that are only 485, which is, if you look back historically, you have the number of sales here, and again, dates along the bottom. Historically, we're used to seeing much higher volumes of closed sales. Now, why is that an issue? Because if you come back over here to active, we have almost 40% more active listings, and we have the same number of sales as we had last year. So that's where you're starting to see some potential change in the marketplace. When you start building inventory and you start to see sales slow down, that's when you can usually start to see pressure on prices. And if you look at sold by price, this is why I wanted you to pay attention to those other charts. Look at the number of sales. Very few sales, $1.5 million plus, million to 1.5 million, and then 750 to $1 million. You start to see it crank up. Now 6 to 750 is not too terribly bad, but if I compare that with the total number of actives by price, look at the difference. You have a ton of actives in this upper area, but not so many homes sold. So that's the bigger the gap is in terms of active versus number of sales, you get a larger inventory, which leads to what's called a month supply of inventory. Right now we're at 2.5 months, which is up over 34% from this time last year. We only had 1.9 months. And as you can see, at least over the last 10 years, we're starting to get more normalized. It should be around 2.5 to 3 months inventory. What does all of this mean? Well, look, if you're looking at buying, there's some good opportunities coming up, meaning we're starting to see inventory build. Sales aren't as robust, or they're not keeping up with the total number of inventory on the market. So you're starting to see more choices out there. You may be able to negotiate a little bit more and get yourself a little bit better deal. But again, it really depends on the price range that you're in, because remember, if you're down in the lower end price ranges, there's not as many actives, or there is the same number of actives, but that's where most of the sales are taking place. Upper end price ranges, if you're looking at selling anything over, say, 600, 650 and above, I would get very aggressive on your pricing. On the other side of that, though, if you're in the lower end price ranges and there's not as much inventory, and we're starting to see a bunch of sales down here in the 4 to 5, 5 to 6 range, if you're in this price range, still a pretty good chance you're going to sell pretty well, but the days of multiple offers and bidding over asking price are pretty much gone. You see that once in a while, but very rarely. It's becoming much more of a price sensitive market. So speaking of sensitive markets and prices and all of this, if you have questions about the home you're thinking of selling, or maybe what the value of your property is, a great place to go is renohomes.com. That's our website. Right here front and center, there's a Find Out Now button that we have. If you want to know what your home is worth, we'll give you an automated valuation. We'll also follow it up with a bunch of great information so you can make the best decision possible. And you can even use this if you're a buyer. If you're thinking about buying a home, you want to make sure you're not overpaying and the price is right, you can use this valuation engine as well. Beyond that, if you have any questions, we will sell your home for only $49.95. If your home's over $500,000, it's only 1%. Extremely good rate and value for selling your home compared to maybe paying 5 or 6%. Can save you thousands upon thousands of dollars. We are a full service real estate company, which means we basically do everything from showing your house, advertising it. Our phone number and sign is in the yard. We take care of everything all the way until you get your check. And the good news is your check is usually much, much larger because you're not paying a huge amount of commission. So we hope you have a wonderful May, and we'll see you next month here on the Reno-Sparks Real Estate Market Update Show. See you next time. Bye-bye.
Assist you sell way smarter.